Yeah, hello everyone. I hope you're doing good. I know it is night, but you know, I want to talk about the stock market a little bit. And okay, hello everyone. Okay, I hope you all can hear me, right? Hello, hello. Okay, today I want to talk about the stock market, and it is, I know it is okay midnight over here, and today the topic will be about choosing your entry point. When you want to buy a stock, when you want to trade a stock, you need to choose an entry point. And today we will talk about that. Hello, Think Dragon Think. How you doing? We are three here right now. Please hit the thumbs up, okay? We have five now. We have five people watching this right now. And I will go ahead and talk about Litecoin. I have a subscriber TV channel. So we were talking about Litecoin and he wanna get into Litecoin. But today we wanna see if the if the position right now is it a good entry point to buy Litecoin or should we wait? And I have the monthly chart right here. Okay, we have the monthly chart, and where if you look at the monthly chart, like at December 2017, Litecoin spike and it got this resistance. Then it drops huge till this support, then a bounce of this support, and it is reversing right now. So it is a good time to buy or to wait. In my opinion, with this reversal, we still have to wait till the stock drops a little bit. Then you take a position in it. Okay, you don't want to go and buy it right now. You want to wait. It is $77 right now, so a little bit, on the cheaper side. When you look at this spike and this support, where it is right now, it's not that bad. You could take an entry, but you still want to wait till it break above this resistance. Because this is the resistance that we have to set up now. If this stock, if Litecoin, I'm sorry, I keep talking about stock, so I forgot about I thought it was a stock. This Litecoin, if it break above this resistance, this is when you want to take a position. Then you're sure that this stock is going to spike again. But right now, you want to wait till it comes back at this support. Once it hit this support, you might take a position in it. Um, yep, that's it. So I hope a TV channel. I hope you can take a decision, a better decision, okay, depending on this chart. Okay, when we look at uh, since June 2014, Litecoin has that. Okay, hold on. Let me draw this resistance line. Spike above this resistance, then it went up, then it dropped. So here we are again. We have to wait till it pull back a little bit, then you take a position in it. That's it for Litecoin. I'm gonna go and do some quick review on some other stocks. We're gonna choose Coca-Cola. I like Coca-Cola because I traded a lot, and you need a go-to stock, a stock that you can take profit on the daily basis in. Let's say, let's see. Okay, Coca-Cola. I did a review like few months ago, and I talked about Coca-Cola. Then Coca-Cola spike. This was the resistance that we were talking about, and see how we broke above that resistance. We are up right now. Coca-Cola is up right now. So you have to be patient at some point. And when do you take an entry? Your entry point is very important. And when we talk about entry, you have to choose your entry point right. And there are two main entry point that you can be taking a position at. There are the resistance and there's the support. When you look at the support, the stock come down there and it bounce off this support multiple times, then it start going up again. When you want to take an entry, you look at the resistance. This is something that I'm just teaching. And when it comes to the stock market, you pay money and you learn about the stock market. You have to buy some classes that you have to learn about the stock market. But when it comes to YouTube and stuff, I'm sharing some of my knowledge for free. I just don't want to charge people. But I noticed that when you teach for free, people don't take it for serious. It's like something, it's just like a joke, okay? But stock trading is actually simple. It's not, it's simple, but it's not easy, okay? It is simple, but it is not easy. Let's look at this. When I did the review on Coca-Cola, I said that Coca-Cola could break above these resistance. And what happened? Coca-Cola hit it and went back. Then it broke above it. And here we are right now. And I do have a position in Coca-Cola. So sometimes you have to be patient with the stock. Okay, I'm sorry. And it is the reason why I tell beginner to start with swing trading. When you wanna start with the stock market, you need to start with swing trading because you buy the stock and you give the stock some time and you observe the stock because you are just a beginner. You don't want to day trade when you just get started in the stock market. There's a lot into it, okay? There's another stock that we're gonna look at, Pfizer. Let me show you another stock, Pfizer, and I did a review on Pfizer too. I don't use moving averages. I'm sorry, I don't use moving averages. I trade my stock nakedly. I'm sorry when I say that. It means um, I just look at the chart and I base my decision on the chart. I don't, okay, I don't use moving averages. I like, I just like the chart like this, the way it is. Okay, let's look at Pfizer. I trade Pfizer a few days ago, but today it's spike. This is what I keep talking about. this is the sentiment of the stock market. Okay, the stock is trading in range. Pfizer is trading in range. Then it came at this support, and I told some of my friends, okay, people that are with me, I told them this is the time to buy. Some of them they bought, some didn't. But see what happened. Pfizer bounced again. When it was at 38, I took a position, and today I drove it till the top because Pfizer got a good earning, and I sold my position. Simple like that, okay? You don't wanna overcomplicate your trade. Trading is actually simple. You don't wanna complicate your trade. We are just three in the chat room. Let's go and look at HRL. I took a position in HRL as well, but here I did have to average down. The reason was HRL Homer Food got a huge drop. I bought at the support, but it dropped below the support, and then it went down huge. But I'm still holding this position, and I hope it will bounce back. Actually, in the stock market, you don't hope, but I know what I mean by hope because I know how this stock behaves. It will come back at a certain point. And this is it. I don't have anyone in the chat room, and I'm just gonna stop at the live stream. Oh, the SS family is right there. Oh, hello, host and everyone. Hello, the SS family. How are you doing, my sister? I'm just trying to test. Okay, my software. I have OBS, so I'm trying to test it out. Okay, that's the reason why I'm doing this late. It is late. It is midnight. Okay, midnight 31. But I'm trying to do something. If someone is online, I mean, if someone is available, I mean, they can join the live stream and we can talk. It's not a big deal. If you have a stock or you do investment and you want to talk about it, it's the right time. You can give me a stock. We can look at it, talk about it, okay? And I do appreciate each of you guys coming in the live stream. Thank you very much. Thank you for your support. And I'm a little bit quiet. I don't talk a lot, but with YouTube, I gotta be talking. So I'm doing it, but it's okay. It's okay. Um, I'm doing great, bro. Thank you, SS family. You guys are my family. You guys are my YouTube family. Thank you for being here. I don't know if you do investment. The SS family. I mean, do you do any investment? I mean, do you invest in stocks? If you do, okay, give me some of your stock. We might be looking into them. Okay. I talk about a stock on NBRV. It is a penny stock. I talked about this stock like few days ago, and I said that this stock might spike either way, up or down, okay, because it was forming a symmetrical triangle, right? You can see on the chart. And then, thank you, sister. Thank you, sister. Thank you. I'm not really used to all these, but I'm trying to do it. And this is what I do most of the time. That's why sometimes you guys don't see me on YouTube. I gotta focus on my chat and on my trades. And I said the NBRV was doing. Ah, okay, okay, okay. No problem. but you should be thinking about it, okay? In the future, you should be thinking about it. And I'm gonna jump in that subject quickly. I know most of us, we don't do investment, we don't invest in stock. And there's a reason why we should be investing in the stock market. It's not a subject of the date, but I'm gonna get into a little bit. Okay, here's the thing, and I explained this to someone like few days ago. We are in a capitalist economy. In the United States, we are in a capitalist economy. It means that companies, right, are the one that lead the economy. Like you wake up in the morning, you're gonna buy your breakfast at McDonald's, and you gotta use your phone. You gotta buy iPhone. I mean, you gotta buy Samsung. You gotta buy all these stuff that we use on the daily basis. You gotta go in CVS. You're gonna buy some paper towel. But those things, yeah, it's true. It's true. It's true. It's true. It's because we are scared. But I want to explain something, and I'm sure after I'm done, you will understand it. Those things are made by companies, okay? And those companies, uh, we have to invest in them. Okay, look at Apple. We always buy Apple phone. We always buy a HP laptops. We buy Dell laptop. We buy a bunch of things that we use on the daily basis. Those companies, they make money of us on us. The reason is when you go you buy one phone of Apple will make profit on you because Apple have made that phone, and you are buying it at a price that is comfortable for Apple. But Apple had made a profit on you. Now, you use Apple phone and you don't invest in Apple. How are you going to make money? This country is a capitalist country. When I say that, people always laugh a little bit. Oh, what are you talking about? If I don't invest, how am I gonna? No, I'm still gonna work and I'm gonna make money. It's not about working. The system that we are in, it is a capitalist system. You have to let your money work for you. That's something that most of the time people ignore. And the rich, they got richer. The reason is they know this, and we don't know this. And we keep struggling on the daily basis. We want to go to work 24/7, okay, get a overtime, do all those shit. That's not what's gonna take you out of poverty, okay? You need you need actually to invest your money. You have to let your money work for you. That's the main thing. And when I started this YouTube channel, it wasn't about getting monetized, make money of YouTube because I was trading already. I'm still trading, and I can make those money on a day. I can make money on the day, but the goal, the reason why I started this is because I know that a lot of people, they are in darkness. They don't know about the stock market. So I try to bring the stock market to people, and yeah, it makes sense. It makes sense actually, but people don't understand it. They don't. It's hard. It's hard for some people to understand. Why? Because of emotion. I don't want to talk about some stuff, but I have to because it is about the stock market. Okay, it is about the stock market, and why people don't invest most of the time, because we are okay, human beings, and we have emotions. Yeah, I don't know why, but I can't switch my internet right now. Yeah, I will do it later. I think I'm gonna use the other Wi-Fi, but gonna be at the next one, at the next stream. I'm not gonna use it. I'm not gonna change it now. Okay. Now, Why people, okay, why people don't invest? Why some people do not invest? The reason is simple, because we are human beings and we are emotional, right? You go to work, you make money, and you are attached to that money, and you don't want to lose that money. Or if I put my money in the stock market, oh, I might lose my money. Yes, you can lose your money, but it doesn't mean the stock market will lose your money. When you are down, it doesn't mean that you are losing money. You have to understand something, that the stock market, it is up and down. A stock goes up and comes down. Those are two things that we have to understand before investing in the stock market. When you are holding a stock and you don't sell, yeah, I'm learning and feeding the. Oh, okay, 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 okay. No problem, sister. I appreciate it. I really appreciate the fact that you are still watching. It's okay. Yeah, I don't do this, like, I don't usually have time to do this live stream, but I'm learning it, because if I'm gonna be on YouTube, I have to start streaming and going live. Okay, that's why I'm learning to do it. But I'm not really a social media person, but I'm doing my best. Okay, so you have to, yeah, it is doing that again, but it's okay. I'm gonna keep going. So you have to invest in the stock market, and that's the reason, because companies, okay, they are the one leading the economy. We buy things, and I'm gonna give you one example. You guys know that, I don't know if if I have to talk about this, but I'm still gonna talk about it. When you go and you buy a juice, a bottle of juice, the same amount that you bought, um, I mean, a bottle of juice three 3 years ago, it is different from the same amount that you're gonna buy that same bottle of juice today. Yeah, I know what you mean. I know when people are losing money, they get, they got heart attack. But I'm gonna show you something. Today you will learn, and I hope you learn. And there are something that, to be on the safe side, they stay away. Okay, okay, but you are not on the safe side. Okay, I'm gonna tell you this: the stock market. The only thing that people don't know about the stock market is you don't have to be emotional about the stock market. Even the money that you hold, the dollar that you have in your hand, you can use it right now and buy food, buy anything that you want. But that dollar is worthless in 5 years from now. You know the reason why? Because when you go to CVS store, you buy a paper towel. I'm sure years ago we used to buy a paper towel like at 10 cent. Okay, 10. Okay, 50 cent. You might get a paper towel. But right now, you go to CVS, it is at a dollar something. It means that the amount that you spend on product, on things that we use on the daily basis, we are not the one that decide on that price. Okay, it is the company. It is the company that make the product. Is the company that decide on the amount that they're gonna sell that product. So we keep having the price going up on the single, on every day, on the daily basis. The reason is it's not you that decide, it's the company that make this water. The company gonna tell you, okay, I'm gonna sell this water at 10 cent, I'm gonna sell it at $10. But the stock market has proven that the price has always increased, the price will never decrease. We always having a valuation. We are not decreasing in price. The dollar amount is worthless. Let's say you have $10,000 right now. You put in okay in your room. You hide it for 10 years. Afterward, that those $10,000, that's still gonna be $10,000. But if you put those $10,000 in the stock market and you leave it for 10 years, you might get 10%, you might get 20%, you might get 100%, you might get 200% over 10 years. What do that mean? It means the dollar, money is worthless when you just holding it. Why? Because the money that you hold and the things that you're gonna buy against the money, the things are increasing in price, and you still holding that amount of money. Your money is worth less. Is worthless in terms of time. That's why investment is good. When you are investing in stock, it is something very, very, very good. And you have to look at it on the long term. I'm going to show you guys a chart. Let's go back to Coca-Cola. I'm going to show you the chart of Coca-Cola, and I will show you a reality that most people miss. I'm going to go on the monthly chart. This is the monthly chart of Coca-Cola, and let me show you guys something. I know it's not fun. People don't want to do it. It looks scary. This is the monthly chart of Coca-Cola. And hold on, let me show you. Coca-Cola. Okay, the company was started in 1969. But if you look at Coca-Cola, see how the chart keep increasing in terms of value. You see how it went? This is how. Hello, Miss Trish and family. How are you doing? Yeah, hello, how are you doing? And okay, we are having a little teaching right here, and I hope you guys will learn. It's just a, a live stream that I'm doing. I'm trying my skills, okay? So, you know, Coca-Cola has gone up over the time, and see where it is now. When you look at Coca-Cola, back in the days, it was at 16 cents. 16 cent a share. One share of Coca-Cola was 16 cent. That was around 1969. But look at where it is now. If you look at here right now, it is at 49.06 cent. This is how the stock market works. The stock market has always gone up. Let me take a stock, another stock. Okay, Apple. Let me take Apple stock, and let's do yeah, hold on, why it's not coming invalid? Okay, it doesn't. Hold on, let me see. Apple. Okay, okay. This is this is the chart of Apple stock. So Apple stock. Okay, back in. Hold on, let me go down a little bit. Back in 1981, one share of Apple was at 8 dollar and 94 cent. And see where Apple is right now. It is at $264. Yes. Oh, I know. Yeah, but I'm just telling you something. It's not about years. I'm just proving to you that the stock market has always gone up. Okay, it will never go down. Okay, it will never go down. Like, I mean, the curve has always gone up. Okay, now I understand it. It takes years, right? That's why you should learn about investing When should you buy? You should choose your entry point. That's the thing. That's the topic of the day. Your entry point. When do you want to get in? When do you want to get in? That's the thing. Right now, okay, if you look at it, right, you see Apple stock and you want to take a position in it. You have to take a position in Apple stock when the stock it is at a support, when the stock has dropped a certain point before you take a position. You can't just jump in it and start like, okay, I'm just gonna buy a stock. That's the topic of the day. So I'm gonna go into a little bit and I'm gonna talk about your entry point. What is your entry point? When do you want to buy a stock? Doesn't matter when you are investing or when you are um when you are trading. It doesn't matter. You still need an entry point. I don't know why this thing is buffering, but it's okay. I will change the Wi-Fi the next time that I will be doing this. So your entry point, that's something very, very important in the stock market. And when you are trading stocks or when you are investing in a stock, you want to make sure that you have the right entry point. That's something that you know you you won't catch 100%, but you can do it at least at 70 or 60%. Let me show you. In 2008, the market crashed in 2008. Okay, let's increase this a little bit. Okay, the market crashed in, okay, around 2008 and 2009. We have a huge crash. Oh, hold on. Yeah, instead of using Apple, excuse me, I'm gonna use the S&P 500. Okay, those are the major 500 companies in the United States. I gotta use that, okay? So you guys we understand. I know many people they don't wanna even try it. It's like I don't wanna play with the stock market. The stock market is very dangerous. I'm gonna lose my money. I don't wanna lose my money. Yeah. But how do you make money? And how those companies make money? They sell product to you and you buy those products. That's how they make money. So you should be investing in them. That's how you will be making money as well. Let me show the S&P 500. Okay. In 2008, 2008, 2009, okay, 2000, 2003, we have this recession. I'm gonna draw the line. Okay. We have this recession. It means that the stock market drop. We had a huge drop. But then since 2009, yeah, 2009 till now, see how the stock market has moved up. See where we are right now. We are at this level. We are at all-time high. Imagine you have invested your money. This is why I keep preaching on my channel and I told people when the market crashes, that's the time to buy. When the next crash, we are all waiting for it. When it crashes, that's when you want to dump your money in there and you're gonna write this thing up. Since, okay, hold on, let me, I don't know why this advertisement keep coming in. So the market dropped in 2000 till 2001, then it bounced again. It drops in 2008 till 2009, okay, going to 2010, then it bounced. See here, we see where, where we are right now. Imagine around this time, 2008, 2009, you put your money in this, you'll be up at 300%. 2 to 300%. That's huge. Okay. Okay, look at it. It was 60, 75. I know you won't catch the bottom, but you put your money in. See how you be in profit. Okay. Just leave your 10,000 in there. See how you'll be in profit. That's how people build wealth. And we don't know. I mean, we don't know. And I'm gonna say this. Okay, the Bible say, "My people are perishing due to the lack of knowledge." Okay, we don't know, and that's the reason why I started my YouTube channel. I just want to teach people. I want to open people's eyes and let them know that okay, you should be investing in the stock market. It doesn't matter, especially when you're young. When you are in your 20s, when you are in your 30s, all your coffee money, all the money that you have, and you buy all those new sneakers, instead of buying the product, buy the company itself. Instead of going and buying Jordan, buy the company, own that company, have an ownership in that company. When they say who and who, such and such, own this company, they're gonna call your name. You own that company, and the company will be paying you. It depend on which company you buy. Okay, if you buy a company that pay dividend, they might be paying you the dividend till the end of your life. And if you buy growth stocks like Amazon, Amazon is a growth stocks, and Amazon, you know, when okay, I'm gonna pull up the chart. AMZN Amazon. I'm gonna show you the history of Amazon. Okay, you guys see where it started? It was at 15 bucks. See where it is now. Amazon Amazon is at 1900. See where Amazon were like in 2000, in 90, at 98. One share of Amazon was 15 bucks. Then look at where it is now. Those are growth stocks. And okay, the difference between growth stock and dividend stock is growth stocks, they want to pay, okay, okay, dividend stocks, they want to pay their shareholder. Anytime they make profit, they want to pay the shareholder. And growth stocks, they reinvest the profit that they make, so they don't pay the shareholder. They put Bebela Allure, welcome to my live. I have been trying to get these live for 20 minutes. I won't load. Oh, really? Okay, why it won't load? I don't know. But I'm glad you are here now. So okay. And I'm teaching about the stock market. Okay. And it's just like a mission that I have. I just want to teach people. About the stock market because I saw something in the stock market that many people okay didn't see. So it's just like a mission of mine that I'm trying to teach people that something is in the stock market, and you guys should open your eyes and put your money in the stock market. And the way we look at the stock market, and the way that we look at the stock market, people tell you, oh, you're gonna lose your money. I was talking to someone like a few years ago, and the guy told me, oh, the stock market, oh, you're gonna lose your money. I said, yeah, you're gonna lose your money. He said, yeah. I said, wow. So all those big institution, okay, you wanna do day trading? Yeah. A lot of people, I heard that they wanna do day trading, but day trading, I do day trading. But when you just get started, I recommended that you start with swing trade. And swing trade is just something that you buy stocks. It depends on your entry, okay? It depends on where you want to buy a stock. And there are two levels that you can use to buy a stock. You can be a buyer at the support, you can be a buyer at the resistance. And I'm going to show you something now, okay? I'm going to show you something quickly. Uh, I don't know if I have to go lower. Okay. I'm going to show you something quickly. So this stock, okay, if you can see on the chart, I have this red trend line. I have this green trend line at the top. So this is the support. This is the basic. And I have lost money investing in stock. Oh, you're gonna make them back. I'm telling you, if you follow me, you're gonna make your money. You're gonna make your money back. And okay, believe me, the stock market is simple, but it's not easy, but you can make money. I'm gonna teach you something. This is the basic of the stock market, okay? It's not a rocket science. It's like you don't need like heavy diploma before you can trade the stock market. You see this? Okay, this is the level. This is a key level in the stock market. You see the stock? This is the support and this is the resistance. The stock okay, I'm sorry. The stock dropped at this level. Then it didn't go down anymore. It went up. And if you look at this okay, this is the top and this is the resistance. Those are two things that you have to know. Now, if you see a stock, one thing that you have to one thing that you have to do, you have to draw your trend line. Is the stock going up or is the stock coming down? If you look at this stock, is it going up or is it going down? If someone is watching, say it is going up or going down. I want to see if you guys are following. Is it going up or is it going down? This stock is going up. Okay, it is going up. I just draw the trend line and you can see the stock is going up. This is how you know the trend of a stock. Okay, you have to learn this and it is simple. This is the simplest way that you can learn how to trade a stock. I'm gonna go ahead and open up this a little bit so we can do some other analysis on this. Okay, this stock, okay, Apple, the stock went up, dropped, then it stopped at this point. This is your support. It becomes your support level. Why? Because the stock stopped at this level. It didn't go down anymore. It bounced, start going up. And one thing that you have to know about the stock market is you want to follow the trend. Most of the time people want to be a contrarian, like you want to be, oh, this stock will go up. And many people, they want to predict the stock market. Oh, the stock will go down. Oh, the stock will go up. No, you don't predict the stock market, okay? You follow the trend. You follow the stock, what the stock is doing. That's what you see. That's what you get, okay? Like the stock is going up, you have to follow it. It's going down, you have to follow it. That's how you trade, and that's how you become profitable in the stock market. When a stock is going up and you want to short it, you want to sell it and cover back, you are wasting your time. That stock is going up at that time. So there's a lot into learning about the stock market. I know Many people have lost money in the stock market. It is normal. You will lose money. You will pay your dues at some point. But after a while, you have to build up your own plan how to trade the stock market. And there's a lot of things that you have to know. And when I say that, it's not a rocket science. You can do it. Okay? You can do it. You can build a plan how to trade stocks and you'll be making money. I'm not saying that every single day when you get in the stock market, you will make millions of dollars. No, that's not my point. There are two things in the stock market: you invest or you trade. Okay? When you are trading the stock market, your goals are different. When you are investing in the stock market, your goals are different. There are two different things. Investing and trading are two different things. And the main difference is the time frame. Okay? When you are investing in the stock market, yeah, okay, good morning, Fat B. How are you doing? And welcome to the live stream, okay? I'm teaching about the stock market and I hope you guys will learn something. Um, when you are trading the stock market and when you are investing, there are two different things. And investing is different than trading due to the time frame, okay? The time frame that you use. When I'm investing, okay, when I want to invest in Apple stock, I'm not buying it today and I'm not buying it today in order to sell it tomorrow. I'm buying it and I want to hold it for long term. That's what we call investment. When you are trading, when you are day trading, when you are swing trading, the time frame is different. Day trading, it means that you buy a stock today and you want to make sure that you sell today. Okay? Let's say I'm day trading. I'm going to bring the time frame. If you are day trading, the time frame is different. We have different time frames. Okay? Now, if I'm day trading, I'm going to be using the 5 minute. Any decision that I'll be making. Maraki Tube, welcome to the live stream. Well, guys, good evening. Yeah, it is the AM. It is 1 a.m. right here. Where are you from? Um, when you are day trading, okay, you have to use uh, uh, okay, the 5 minute or the 3 minute or the 1 minute. Sometimes people use the 15 minute and the 30 minute. But when you are investing, you want to use the daily chart, the weekly chart, or the monthly chart because you want to take a decision based on the long term. Okay, you don't want to buy a stock. When you're investing, you don't want to buy a stock today and sell it tomorrow. You want to hold it for long term. So you want a better. Oh, okay, okay. Oh, okay. I'm in the United States. Okay. And please, guy, okay, hit the thumbs up, okay? Since we just only have two thumbs up, okay, hit the thumbs up, okay? Hit the like button. Thank you. So when you are day trading, you want to use smaller time frames, okay? 2 minute and 3 minute chart. Yeah. And when you are investing, you want to use the daily, the weekly, or the monthly chart. Those are things that you have to deal with when you are investing in the stock market. You have to know the time frame to use. Okay, this is a monthly. Each each of the bar that you have, each of these is formed after a month. You see, this is 1 month, this is 2 months, this is 3 months. So those are the monthly bar. Yeah, nice to meet you too. And I hope you hit the like button. Okay, thank you very much. And when we go to the shorter time frame. Let's go to the 5 minute, okay? And we will see Amazon. Okay, this is Amazon start. Okay, let's say it is the 30. Okay, 6 p.m. Most recent activity. Okay, okay. Now, I'm using the 5 minute time frame. Okay, and I know these look basic. Okay, but I'm giving you guys something that you know most of the time you won't get this for free. I did pay for it, okay? I paid for this. I learned this. I paid money before I learned this, but I'm someone that I always want to share. I always want to share with people. Okay, so let's look at this quickly. Today Amazon, the stock opened, then it gap down, then the stock drop, then it stops, then it's a bounce of this support, then it start going up again. This is how you trade, okay? This is how you trade the stock market. And I keep telling people, okay, you don't want to base your decision on your emotion, okay? You want to look at the chart and see what the chart is telling you. This strategy, I know I don't have a lot of people here, but I mean, it's okay. When the stock open in the morning, this is one of the strategy that will make you money in the stock market on the daily basis. And some people, many people, they don't want to use it because they think it is too simple. So let me show you. When the stock open in the morning, you have to draw your two trend lines. This is how you make money in the stock market, okay? You have to drop, I mean, you have to draw your two trend lines. Where is the high of the day? Where is the low of the day between 9:30 and 10 o'clock? Depending on where you are, okay? When the stock open in the morning, you want to see between 9:30, I'm talking about Eastern time, okay? When the stock open in the morning, you want to draw these two trend lines. And this first one, it is in the 50, I mean, it is a 15-minute bar. The second one is it is a 15-minute bar. So you wait, okay? You wait for the stock. This is a secret that I'm giving you guys. I'm telling you, I don't know who's watching, but if you guys want to learn, you guys want to trade the stock market, this is one of the secret that will make you money on the consistent basis, okay? And you will I mean on the daily basis, and you will be astonished. It's like, wow, I should have known this before. When the stock open, these two first bar, you draw your trend line and you wait. You wait for the stock to break above this or to break below this. That's it. That's it. And you will make your money. Simple like that. Once it break below this, you go short. Once it break above this, you go long. And you have your risk management. You put your stop loss depending on how much you want to set as a stop loss, okay? You put it down there and you wait. If the stock goes down, you make money. Yeah, okay, look at it. From this bar, look at how the stock dropped. You could have made this amount of money. Till when you see this green bar coming in, you get out. That's how you make money in the stock market. Simple, but it is not easy. I hope you guys have learned something. I'm not gonna hold you guys too long. Um, I know it is boring a little bit because when you don't know about trading, it's like, oh, what is those chart? What is those bar? And you don't understand anything. It's just like I don't know anything about this. But once you know about trading, you will enjoy it. Okay, and I don't know if you guys have any question. I don't know who's watching in the chat room. If you have a question, please okay leave your question and I will try to answer your question. I know many people they want to day trade, but day trading is difficult. It is stressful, okay? So the best thing to do is to start with swing trade, okay? You buy the stock depending and on your entry and you hold on to it till it bounce or it drop and I mean you sell, you make profit or you hold till it bounce. Depend. And I only use trend lines. And since I've been using trend lines, I'm profitable. I don't use indicators. I'm sorry, I do not use indicator. I trade my stock naked. I just trade the stock. Okay, I mean the way it is. I'm not. I don't add indicators on my chart. Simple like this. When the stock open in the morning, right? Those are my trend line that I draw, and wherever the stock goes, that's where I'm gonna chase it out, and I make my money and I'm out. When I used to use, I'm sorry, when I used to use indicators, I wasn't profitable. I was losing money. Then I stopped and I built up my own strategy and I started using trend line. That's when I become profitable. And this little drop in this stock you can make depending on how many share you have. You can be making like hundreds of dollars, okay? Just from this little drop, you can be making hundreds of dollars. And choosing your entry, this is the solution. I'm not saying this is the perfect solution, but this is one of the best solution. Even the gurus in the stock market, they will explain it to you that this is the best strategy to go with. When you are beginner or you are advanced trader, it doesn't matter. This strategy will make you money on the daily basis. And I'm not gonna talk about it anymore. If someone want some clarification, please leave a comment and I will get back to you. Um, this is the strategy that bought people houses. Okay, I'm gonna tell you simple, simple. It's a simple strategy. Let's look at another stock. I wanna talk about a stock NVCR. NVCR. Let's look at it on the daily chart. Okay, I'm gonna yeah, NVCR. Where are you going? Okay, I did a review on it like few weeks ago, and the stock was dropping, and I said it. I said this stock. It might bounce off this resist this support, and it did. Okay, it did. The stock came at this support, then it bounced. It's dropping again. It might bounce off it again. So when you are trading the stock market, there are some things that you don't want to be doing. You don't want to predict the market. In the stock market, there's no prediction. Okay, you just want to see the chart, see the trend, and follow the trend. That's something simple, but it is very difficult for beginners. That's why, that's the reason why, that's the main reason why people lose money in the stock market. That's the main reason, because we are emotional. Okay, we are attached to our money, and once we start losing money, we get emotional and we sell. Hold on, let me show you something. um let's say, okay, I'm gonna take a case right here. Okay, you buy this stock. I don't know, for some reason, but I won't do that. Okay, I won't do that. I won't buy a stock right here at the top. I know it was the top. I won't buy a stock there. But let's say you buy a stock right here, or you bought it here, and the stock went up a little bit, then it start dropping, start dropping, start dropping, start dropping. You might be emotional, and I might be too, because it is my money, right? And you do what? You sell, because what? The stock is dropping. Why should I sell? Or why should I hold? I should sell. So you sell the stock, and the stock come down here and see what it did. Then it bounce again. That's the emotion that I'm talking about. The stock market. In the stock market, we have emotion, and stocks are driven by emotion. Because of what? It's because of the action of people that trade the stock market. They are the one that move the stock market. Okay, so the stock might go. If I were you, I bought a stock here, and the stock is dropping, I will leave it. If I'm investing in it, okay, I'm talking about investment. If I'm investing in this stock, I will leave the stock. I will leave it till it bottom up. Then, if I want, I will average down, and I will write the stock up again. But you never know. You never know what the stock will do. So sometimes people just get rid of the stock because they don't know. And is that right or wrong? No, depend on your strategy. Depend on the strategy that you are using. It might be wrong or it might be right. Okay. Um, and as I said earlier, I'm not gonna buy a stock at the top. Is the reason why I tell people I rather buy at the support. Okay. I rather buy when the stock it is at a support, when there's blood on the street. Okay, I rather buy that than buying at the top and the stock get dunked on me. Okay, I don't like that. I want to buy at the bottom. So if you want to day trade, if you want to swing trade, if you want to invest in the stock market, your entry point is very important. You have to choose the best entry point. That's why gonna let you be a profitable trader or a profitable investor. Okay, and something that I want to talk about too, and I see a lot of time in the stock market. You see, when the stock come down here, when the stock was at support, because you see all this huge drop, right? Then the stock is here. People don't want to buy it anymore because they saw this drop. Now they are fearful. Okay, they are fearful because they're saying, "Oh, this stock might keep dropping." This stock has three moves. Okay, a stock has three moves. The stock will go up, or the stock will come down, or the stock will go sideways. Those are the three moves that a stock has. Okay, once you know those moves, you expect something in a stock. Let's say this stock has been dropping till it dropped here. You should have in your mind that the stock has dropped too much. At some point it's gonna bounce again. Okay? It's gonna bounce. So once you know that, you have in your mind that this stock might bounce. So you don't have to worry, you just have to hold. Because once it bounce, you're gonna be riding all this trend. And it did bounce. It did bounce. And now it's dropping again. And here is a pattern that I taught you guys in my YouTube channel. This is the double top. The stock hit this, came down, hit it again, then it's going down again. The double top, at 80% the stock will drop, and at 20% it might break above this resistance. So when you see the double top, and this stock does have a double bottom too. See what it did? It hit this bottom. It went up, then it hit it again, then it, it bounced over and it is up. So the stock market, when you are investing, you have to take your emotion out of the equation, and you need to use your logical instinct. Okay, you don't want to be emotional in the stock market. If not, you will be losing money. And how do you call it? Warren Buffett. He he's the one. Okay, I learned from him a little bit, but as for myself, I'm a deep buyer. Okay, I'm a deep buyer. I don't wanna buy at the top. Okay, I always want to buy at a discount. He said you should be greedy when people are fearful, and we should be fearful when people are greedy. Okay, that means what? It means that when you are holding a stock, or when a stock is dropping, you don't want to buy a falling knife. That's one thing. Okay, you don't want to buy a falling knife. But however, you want to make sure you buy the stock at the bottom and you ride it up. Go if the stock is going up and it break above a resistance, it's okay. You can still drive it. You can still ride the stock and go up with the stock. There's no problem about that. But when you want to go and buy at the top and you think these stocks will keep going up, then the stock drop on you, you should get up. You should get up quickly. Like this, if I were taking a position in this and this stock start dropping, I should I should get out quickly. Because of what? I don't know. But the thing that I know is the stock is dropping, and the stock is not doing what I want the stock to do. Okay? It's not it's not doing what I expect from it. So I should stop. Okay, you stop. You stop it. And that's something that I talk about a lot. The stock market, there are two things that you have to bear in mind. It's action and reaction. Okay? The stock will act and you want to react. Okay? I'm going to show you a daily chart. Okay, let's go. No, I'm going to show you a 15-minute chart that look really crappy. I'm going to choose something else. Let me choose Pfizer. I like Pfizer a lot. I trade it a lot. Okay. Um, this is an hourly chart. Okay. Every single bar you have on this chart is formed after an hour. So let's say the stock open. Okay, the stock open around 38.65, something like that. Then went up. If I were going long and the stock didn't do what I wanted to do, I should exit. That it is about day trading. I'm talking now about day trading. Okay. When you are day trading and you notice like the stock is not doing what you want the stock to do, you should exit quickly, depending on your risk management. Okay. What is a risk management anyway? It is the fact that you set up your reward and you set up your risk as well. Okay, those are ratio that you have to define. Okay, I'm gonna go 3 for 1, or I'm gonna go 2 for 1, or I'm gonna go 4 for 1. It depends on your risk and reward ratio. Once you have that in mind, if your stock is going below your risk, you have to exit. If your stock reach your target, your reward, you have to start using a trailing stop loss. Okay, you have to use a trailing stop loss. Why? Because you don't want to lose the gain that you have made. You have made gains in the market already. You don't want to lose those gains. You just want to lock in your profit. Simple like that. Okay. Uh, Profit gains. Hi, how are you doing? Thank you for coming in, and I do appreciate it. I mean, do you trade stocks or do you invest in the stock market? So, when you are day trading, it is really, really important to take quick decision. Okay, and you wanna use uh smaller time frame. You wanna use the 5 minute chart, and you wanna take quicker decision. Okay, you don't wanna stay in a losing trade. When you are losing a trade, you have to get out quickly. In day trading, that's about day trading. We have different type of trading. Okay, we have scalp trading, we have swing trading, we have okay, how do you call it? Yeah, day trading, swing trading, scalp trading, position trading. Okay, you buy stock depending on your uh, choices, and you have a lot of position depending on which one is performing, and you hold on to them. Okay. um I'm sorry, my voice is gone a little bit, but it's okay. So when you are swing trading, you use the daily time frame. Okay, when you are swing trading, you want to use the daily. I bought Pfizer like, yeah, 2 weeks ago, because when I'm trading a stock, you see, Pfizer has defined the support. Like how many? Yeah, since okay 2019, right? We had this support level that, and this resistance level that Pfizer has been respecting. Anytime that stock hit this level, it drops, then it bounce again, it drops, it bounce again. So I have been trading it since okay 2018. So I know a little bit about Pfizer. When Pfizer came at this support, many people thought, oh, right, okay, this is it. It's going down. It's gonna go down. And some people were expecting 35 the dollar, okay, price. But I knew that Pfizer wouldn't go down because the earning was coming, and Pfizer did have earning yesterday. Wow, Pfizer beat earning, had a good earning, and see where the stock is right now. It bounced huge, and this is how you make money in the stock market, because the sentiment of people, you see this red, all this red bar coming down, people thought it we're gonna keep going down. Now it won't, because a stock act as a rubber band. And if you ask all those gurus in the stock market, they're gonna explain it to you. Stock, they act like a rubber band, right? They're straight in the contract. That's how they behave. When a stock is dropping, it's not gonna keep dropping the whole time. It's gonna stop at some point. That's when you wanna catch it and you wanna take that reversal. You wanna ride it up and you'll be making money in the stock market. And there's something also that I wanna talk about quickly is I don't usually focus on the fundamental analysis. I don't do that. I mostly base my decisions on the technical analysis, on the chart. And, you know, I don't want to know the income that the company is making. I don't want to know, the cash flow, the 10K, the 5K. I don't want to know any of those things. I just want to see the chart, how the stock is behaving. That's what tell me to take a position or not. If the stock, even if the company itself, the company is making millions, billions of dollars a day, but the stock is going down, I'm not gonna buy. Depending, if I'm going short, I can short it, but if I want to go long, I'm not gonna buy because the price action, that's something that beginners they struggle with a lot of time. When you are starting trading stock, there's something that you have to know: the price action. I'm talking about trading, okay? I'm not talking about investment, investing in the stock market. When you are trading, you have to focus on the price action. And I made a presentation about that few weeks ago, where the stock has been, where the stock is, where the stock is probably going, where the stock has been, where it is now, where it is probably going. Okay, that's how you find the price action. When you look at a stock, where this stock is going, where has it been, where it will probably go back to. Those are the three things, those are the three questions that you have to ask yourself every single day when you are trading a stock. And that is the basic of price action. Okay, what is the stock doing, what the price is telling you, and you want to follow the volume. It's right here. You see all this volume bar, right? I'm going to show you something quickly and you will see. um you have this drop, you have this huge drop, right? The stock is dropping, dropping, dropping. Then you have this green bar. This is the volume bar. You have to look at them when you are trading also. You have this green huge bar. And when you look at the candlestick, look at this huge candlestick. Then the stock stop and it bounce and it keep going up. Those are the major things that you have to look at when you are trading stocks, okay? It is very, very important to know about stock trading. And as I said at the beginning, we are in a capitalist system. Okay, the system is based on corporations. It means that companies are the one leading this country. It means that all the product that you're gonna be buying are made by companies. So at some point, you have to invest your money in the stock market, especially when you are young. When you are young, you have to put your money in the stock market because This is where you can build wealth. Okay, you can build your wealth through the stock market, and it is very um, amazing that we have this. Why? Imagine that we don't have companies. How are you going to work? We have companies now. You let companies work for you. Okay. I don't know if you guys have any question. If anyone has a question, please just send your question and I can tell. Or you have a stock that you want to look at or you want to trade, you can send it and I will look into it. I'm gonna go back to Bitcoin. Okay, Bitcoin, Bitcoin US dollar. Okay, let's look at Bitcoin on the monthly chart. Okay, Bitcoin did the same thing as Litecoin. Bitcoin and Litecoin are doing the same thing. And if you look at the chart, in 2013, April 2013, Bitcoin was around two. Hold on, let me see. It was about $60. Then it spiked in 2000. Okay, in December 2017, Bitcoin was at 19,000. Okay, then it spiked. It went up really huge. Then it drops. Then it is right here, and it's time to reverse it again. And if you want to invest in Bitcoin, this might be a perfect entry. But if you didn't get this entry, you have to wait. If it pull back a little bit, you get into it because this is just like a support, a temporary support. It depends. If it bounce off it, you take a position and you ride it up. If it go up, if it doesn't, depending on your plan, if you want to hold for long term or you just want to swing trade, depend on you. I don't know your intentions. Okay, let's look at Litecoins. Okay, okay, okay. Litecoin. Okay, it's the dollar. Okay, I talk about that one already. Let me go back to Bitcoin. I'm gonna leave this thing on Bitcoin. It's gonna be on silent mode. Bitcoin US dollar. Oh, let me put it on the daily time frame. Let's see what we got. Bitcoin it is at $5,628 right now. On the weekly chart, let me look at the weekly chart and see where it is. Okay, so it is bouncing out this support. This might be a good entry. This might be a good entry for you, but let's look at it quickly. You look at this thing and it break above this is a good entry. If it doesn't break above this, it might drop. So you want to watch out for it. Um, what else? Hold on, let me see if I can just put it on the 5 minute chart. Okay. Oh, okay. I don't. Okay, I'm gonna leave it on. I don't have any review to do anymore. Okay. I'm gonna. I think I did it. And when you want to choose your entry, okay, I think I'm gonna end this stream soon. When you want to choose your entry, there are two things, two entry point that you can decide to get in the stock. Okay, they are the major one that I know. Okay, it depends on you if you. I mean, depend on you. Let's say okay, I'm gonna draw this straight line. Okay, there are two major points that you can get in a stock. Okay. Oh, okay. I'm gonna start. Oh, are you still here? I thought you guys left, but it's okay. Oh, okay. Yeah, okay. I stopped the music. Okay. Um, there are two entry point that you wanna look at when you wanna trade the stock. There are two entry point. Okay. Those two entry point, it might be at the resistance or it might be at the support. So how do you choose your resistance point? This is the resistance. The resistance here, you look at this stock, the stock was dropping, right? Then it dropped. It came back, it hit this, then it dropped again, then it bounced, then it drops of this again, then it bounce again, then it start going up, right? Okay, 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 I got you. Um, this is your resistance line. You gotta draw your line. Now the stock came down, drop, drop, then it find a support down here. Okay, it find a support. Why? Okay, I'm gonna ask you a question. Why the stock didn't go down? We don't know. But the only thing that we know that once the stock hit this level, it stopped going down. It didn't go down anymore. So if I'm watching the stock start dropping, and then it hit a level that it stopped going down. It's not going down anymore. Okay, okay, the stock is not going down anymore. Then it start going up. It means that this is my support, and this was the resistance. This is my support. Once the stock stop going down, it's telling you that, oh, okay, the sellers, people that are selling the stock, traders that are shorting the stock, they have stopped. Now the stock is reversing, is going up. You can take a position in this stock. And this might be a swing trade or it might be a day trade. A swing trade, it means you might buy it and hold it for a few days, okay? Now, if it is a day trade, it means that this stock you buy it at a support, like okay, the stock market opens at 9:30 Eastern time, okay? You buy the stock, let's say at 10 o'clock. By 11:30 or by 12 or by 4 p.m. you have to close your position. That's a day trading, okay? You buy in the day and you want to sell in the day, okay? It's an intraday trade. You don't want to hold overnight. Some people they don't want to do that because there's a risk the stock might gap down or it might gap up. If it gap up and you are going long, it's okay. If it gap down and you are going short, it's okay. But if you are going long and and the stock gap down, you'll be losing money, big money. So some people, some day traders, they never want to hold a stock overnight. So once they get in the stock, they want to make sure that they sell the position. I mean, depend. I mean, they want to make sure they close their position before the end of the day. Okay, that is a day trading. Now, if you are swing trading, as I said, you want to hold it overnight or you want to hold it few weeks or few months, depend on your strategy. Okay, so the stock hit the support, then it bounced, it start going up again. Once you see this, that's the reason why I use trend lines. I don't use moving averages. I don't use indicators. I just use trend lines. You might not get the right support. I mean, you might not get the stock exactly at the support, but as at 50, 60%, you might get it. I mean, let's say, okay, I'm gonna show you something and you're gonna understand what I'm talking about. Okay, let's say, okay, this stock is dropping, and before this date, okay, the stock was dropping. I'm gonna say till this line. If I bought on this candlestick, the stock kept going down, right? It means that I bought it a little bit earlier. I should have waited. But it wasn't a big deal because the stock stopped going down at the support. And if you bought here and you still have money, I'm talking about swing trade, you can average down your position and hold on to it and put your stop loss, depending on your strategy. It depends on the strategy that you are using. You can put your stop loss below this support level. It means that you are telling yourself if this stock will go below this support, you want to get out. You don't want to lose more than that. Okay. Now, if the stock doesn't go down and the stock is going up, you want to ride it up. It means that you want to stay in the stock till it goes up. And look at what the stock did. It started little by little, little by little. It was a little bit choppy. Then it hit this resistance first. That's why the key levels in the stock market, they are very important. I told you guys that this was the resistance, right? And major traders, right, major investors, right, they look at the key levels in the market. You see when the stock was going up, then it hit this resistance level, right? It went up, then it dropped. You see this drop? This drop is nothing. It's just a pullback. Why? Because of the sentiment of people. Because this resistance, once it break above it, some people took their profit. The stock dropped. But due to the fact that the stock, I mean, the stock was going upward, I'm gonna say this, due to the fact that there's a lot of buyers. Okay, there are people that are pushing the stock up. They are buying the stock. The stock kept going up. Or there's a good news. The stock kept going up. And the second time, the stock broke above the resistance, and the stock went up, went up, went up. Then it started trading sideways. Then it dropped. That's how you trade the stock market. There are two key levels, the resistance and the support. I don't usually, with my trades, at 85%, I buy at the support. I 10 to 15%, I buy at the resistance. I don't usually buy at the resistance unless I know that the breakout at the resistance, there's a momentum in it, I will buy. And when I do that, I always have my stop loss below this uh, resistance bar, because I don't want the stock to go down. Because once it start going down, it will drop huge because people will start selling. Okay, so anytime you are buying at the resistance, you gotta make sure that you have a risk management, because if you don't, sometimes the stock, they don't break out, they have a fake breakout, then they start dropping, and you're gonna lose a lot of money because you are buying at the top. Okay, then the stock is going sideways. And the other thing that I'm gonna be adding to it, and this is a secret too, it's not a secret anyway, but these are the best tool to use when you want to trade the stock market. Okay, I have four people watching, and I'm gonna share this with you guys. You guys are the lucky ones. I don't usually do uh, um, live, but I'm gonna show you when a stock is trading in range. Okay, when the stock is trading in range, please avoid it. Avoid stocks when they are trading in range, because you don't know the next move. That's when people lose money. You want to catch the stock when the stock is making a move. That's how you make money in the stock market. Okay? When a stock is trading in a range like this, is doing this choppy move, you don't want to stay in there. This is not the right time to be in this stock, because you don't know the next move. Because you might be going long, it means that you are buying it and you are hoping that the stock will go up, but the stock might drop. You uh, you are shorting it, it means that you are selling it because you think the stock will go down, but the stock might go up. So when you are doing this, when you are trading, one of the things that you want to avoid and you want to become profitable in the stock market is you don't want to trade ranges. You don't want to trade stocks when they're in range. This stock is in a little, even if I draw this, it's still in a range. Okay, you see how it's behaving? It's still in this range. You don't want to trade, and the next thing that happened, the stock drop. You don't want to be in the range. You want to see, if I were here, I'll be watching this level. Once the stock start dropping, that's when I'm gonna go short. It means I'm gonna sell the stock. And I don't know if I have to get into that, but many people think in the stock market you only buy stock. It means that you buy them. Sometimes you can sell stock, you don't own the stock. And once you do that, we call short selling. It means that you don't have the stock, but you are selling it, and you hope to go and buy it at a lower price later. I sell this stock right here. Hold on, let me show you something. This is what we call short selling. Okay, when I talk about short selling, uh, many people don't understand about it. Okay, so I'm gonna make sure I explain it right today. Um, it's something that a professional do and that a lot of people do in the stock market. Um, yeah, I'm gonna put it here. I'm gonna put it at a green bar. Okay, these stocks start going down because I have my trend lines. I've been watching the stock and I'm waiting for it. I'm waiting for the stock to break above this line or to break below this line. Those are the two things that I'm waiting for the stock to do. That's why I told you guys don't trade the range. The range is a non-decision. It means that no one knows where the stock is going. So you don't want to trade this, okay? When the stock it is in a range, you once you draw your trend lines and you had your stock in this trend line, okay? You will be watching it. Where the stock gonna break out to? Is it gonna break above this? Is it gonna break below this? Wherever the stock come out from, you wanna follow the stock. Once the stock drop at this level, this first bar, I should be a buyer right here because the stock is breaking below this support line. This arrow, I mean, I will be a seller. I'm sorry. I sell the stock. It means I'm telling my broker, okay, I want to sell 2,000 share of okay Hormel Food. Um, the price is I'm selling it 39 and and a 98. Okay, I sold the stock. I didn't have it before. I didn't have the stock, but I sold it. Okay, it means what? It means that someone else owned that stock, but I went to my broker and I just sold the stock. I said, okay, you know what? I want to sell this stock and I put the money in my pocket. Okay, actually, you have the money in your 3D account. You don't have it in the pocket, but I'm just saying you sold the stock. It means that you have the money now. Let's say I sold the stock at 39 at 98. Then the stock drops to. Then the stock came at this point. It come at 39.83. Then the stock start going up. Once I see this first green bar and the second green bar, I should be willing to cover my position. It means that I sold before. I have to buy back now. That's what we call short selling. Okay? you you sell the stock and you buy back and you give it back to your broker. That's what we call short selling. But most of the time, people just know about buying a stock. Many people don't know about shorting a stock. Okay, you can short a stock. It means that you sell it and you buy it back. Most of the time, we buy the stock. Okay, and we own the stock. But in this case, you didn't own the stock, you sold it and you bought back. That is short selling. See how the stock went down. You could have made 10 cents if you have um 1,000 share on 10 cent. That's almost like a hundred or two, yeah, $100 in 5 or 15 minutes. You make that money, quick money. That's scalp trading. You just want a quick move. 5 15 minutes, you make that money and you add. But you have to be really good to do that. Okay, so those are the key levels that you have to watch. I'm going to show you something else about stock trading in range. I did that on CVS. Okay, we have one down here too when a stock is trading in range. Okay, and this is the little tools that you have to have when you want to make money in the stock market, and many people miss out. They miss out because they do not want to learn. They think the stock market, oh, you're gonna lose your money. Yes, you might lose your money if you don't know what you're doing. Okay, you have to have tools in your toolbox in order to make money in the stock market. Okay, look at this stock. This stock, hold on, let me show you where it popped up from. Okay, I don't want to focus on that. This stock has been trading in range. It went up, hit this resistance, came down, went up, hit this support kind of. The what happened? It broke above this resistance, and look at this long bar. Then it went up, but it didn't sustain the breakout. It stopped dropping again, and it went into it. So stocks, they don't make move. I mean, they don't make big moves. Depend. Penny stocks. Penny stocks. I want to talk about them a little bit. Okay. Penny stocks, they are really volatile. And why? The fact is, I said it in one of my video that penny stock, they are a little bit manipulated. Okay, because with 2,000 share, 50,000 share, like $1 a share, I can buy as many as I want, as many shares I want. But with these blue chip stocks, a stock like Apple stock, you're gonna pay $200. You better have money before you can buy like 50,000 share. Okay, so the blue chip stock, I trade blue chip stock. I don't mess with penny stocks a lot of time because they are really volatile and they do not respect patterns in the stock market. They do whatever they want. Okay, so I don't mess with. I rather take my 50 cent, my 20 cent on a blue chip stocks than willing to buy a penny stock and wait for a spike of okay 100% or 300%. I don't do that. I mean it is risky, but people do it and they make money. I trade penny stock too. I trade one today. Um, I trade this stock today. Hold on, let me show you. It is a penny stock that I traded today. Yeah, hold on, let me show you. That's the 15 minute. It got a spike. Yeah, it was today. I got in around this support level, then it went up and I sold. Then it dropped. After a little while it drops huge, but I was out already. Okay. But I don't mess with penny stock. I don't like them. I rather trade my Coca-Cola or trade some of the blue chip stock. Those are the stock that I make money in, okay, on the daily basis. Every single money that I wake up, I trade Coca-Cola because I know that stock. And you need to have a relationship. Um, I don't know if it sounds good, but I'm just saying it. You need to have a relationship with your stock, okay? When you want to trade a stock, you need to have a relationship. I have been trading Coca-Cola, Pfizer, AT&T, those stocks. I've been trading them for a little while, so I know them. When they are pulling back, when they are at a support, I know, and I go, I buy with confidence because I know where they have been, I know where they will probably go. I'm not saying I know 100%, but I'm just saying I know how they behave. So I trade them with confidence. But if you want to jump in stocks, you any stock that you see, you just buy it. Okay, this stock you want to buy. No, you're not gonna make it. That's the reason why you need a watch list. Okay, you need a watch list that you can be watching those stocks for years. I have one of my okay, my boss. He's a guru. He still trades stocks. That guy, he has been trading Apple stock. since 1995, and he is still trading Apple stock, and he made a lot of money, and he's still making money in Apple stock because he knows how the stock behave. You know what I'm saying? I'm gonna bring okay Coca-Cola. When the reason why I got stuck with Coca-Cola, right? I'm gonna tell you guys today. I said it before, but I'm gonna say it again. Um, I have a history with Coca-Cola. Coca-Cola. When? Hold on. Let me see. Where was it? It was. I started trading Coca. I started trading Coca-Cola when it was at $40. Hold on. Let me see. Yo, it was $40, right? Yeah. It was like 2017. That was when I started trading Coca-Cola. Okay. What happened? I bought the stock. Okay. I bought Coca-Cola. Um. Like I bought it like 40, right? And I left it in my account because I used to swing trade a lot, so I left it in my account. And after like a week or two, I noticed like okay, I bought it at 40. Now it is at $42. And I asked myself, okay, right, should I sell it or should I keep it? That's when I sold it. I sold all the share that I had at that time. And after a while, Coca-Cola dropped. It dropped huge. Then I went back. I bought again. I bought it again. And a few weeks later, it went up again. I sold. Then it went down again. I bought again. That's how I started trading Coca-Cola. And many people said to me, "Oh, Coca-Cola is a boring stock. You don't have you don't have the momentum. The stock is boring." But I keep making money in it every single day. That's how you should be thinking about stock. A stock that will be giving you daily bread. That's what you want. You hold on to two or five stocks that you should be trading. Sometimes you don't even trade them. You wake up, you just watch them. I'm gonna give you something to do, okay? When you want to day trade, when you want to swing trade, at some point, just put the stocks in your watch list, and watch them. Just watch the stock. Watch the stock for the whole day if you want, or if you want 2 hours. Just watch how the stock move. Do it a week, and you will know how stocks move. Especially that stock that you have been watching, you will know how it moves. I'm not telling you that you will catch all the swing in the stock, but you will know how the stock move at, at 50 to 70%. That's how you get used to a stock, and you'll be making money in that stock on the daily basis. So having a watch list is very important. And when I did my review on Coca-Cola, I said it Coca-Cola was setting up for a breakout, but then a pullback. So it was a fake breakout. Then start going up again. We have this huge breakout. If you have bought at this level, it was at 46. Right now it is at 49. You'll be in profit. Okay. So this is a buy at, this is a resistance. You are buying at the resistance. Okay. You are getting here. There's nothing wrong about buying a stock at a resistance. There's nothing right about buying a stock at a support. It all depends. It's all based on your own strategy. It all depends on how you want to manage your trade. Okay? Someone will buy at the resistance and will have, you know, he or her own uh, strategy, and you too, you will buy at the resistance. You have your own strategy. At the end of the day, you want to make profit, and you need to have a strategy. You don't want to go in the stock market okay, blinded. You are blind and you want to go trade the stock market. No, you will make money. You will keep losing money. And one of the best thing that you have to do when you decided to trade stocks is to learn about them. You have to put in time and you have to learn about stocks. When you start learning about stocks, it looks difficult, something very difficult, and especially when you are learning from some people. And I was in the same situation. I learned from some people that they made it really difficult to learn. And once that they do that, okay, you feel like, okay, I can't do this. It's too complicated. I can't do this. Hold on, let me show you. Um, Hold on, let me show you. A chart that you have, they have moving averages all over the place. They have indicators. They have all this moving average, average true range. Uh, they have a lot of moving averages on it. Then you feel sad. It's like, okay, I can learn this. This is okay. This I can learn it. But once you learn with someone that can explain it to you, the stock market is very sweet. You might lose money the first year, your first year or your first 6 months, but after that, you know, you'll be profitable and you want to learn it, the right way. You don't want to learn from people that are going to make your life difficult. You want to learn it the right way. And stock trading, I'm telling you, hey, you don't need all those indicators to make money in the stock market. I'm telling you, you don't need all those indicators. It is simple, but it is not easy. Okay, it looks simple and it's simple, but it's not easy. When I say that, okay, what do I mean? I mean that when you want to trade stock, you need to have a mindset. Okay, you have to change your mindset, and now you have to think. Okay, now you have to think out of the box. Okay, you don't want to be thinking as you used to think. You have to change your mindset. And how do you change your mindset about stocks? You have to know now that stocks are driven by emotion. That's the first thing that you have to know. So you yourself, you have to do yourself a favor. You don't want to be emotional. You buy a stock, the stock is dropping. I bought a stock, the stock is dropping, then I get emotional and I sell. You sell, then the stock bounce, or you start feeling sad. Oh, I should have held on that stock. Why did I sell? Or why did I sell? And then you feel bad. You feel bad. Okay. Oh, then the next time the stock does something, you don't even want to buy anymore. You don't even want to buy because you have lost money. Okay. You feel bad about it. It's okay. Sometimes you lose money. That's normal. You're not gonna win all your trade. You're gonna lose some of your trade, but you wanna win most of your trade. Some of the trade I take small win, okay? I just I take small wins. I look at the trade, I say, okay, I'm not gonna waste my time, and I take a small win, and that's it. Okay, I'm out. But now sometimes you can take a small loss and get out of a trade. You don't want to lose huge, and that comes down to the style that you want to use. If you are using day trading or if you are using swing trading, when you are using swing trading style, you don't want to be selling like that. You have to define your limit, okay, your risk, and you have to define your reward as well. That's how you become profitable. And I don't know if any. any of you are still watching, anyone is still watching, or if anyone has a question. If you guys have a question, please leave your question in the comment section. Who is still there? Who is still watching? I don't know who is watching. Oh, you still here? Oh, okay. Good. Ah, good. Oh, good, good. Okay, so do you trade stocks? Oh, yeah, you told me that you. Hold on, let me see. Hold on. Oh, you have lost money in stocks. Okay, okay. So, are you still trading stocks, or or did you stop? Okay. So, choosing your entry, it is very important because your entry is the main. Ah, okay, okay, okay. Yeah, I'm doing a review on an application called Weibo, and I'm gonna put the review. I'm gonna upload the review soon. And Weibo is a commission free broker that I'll upload the review okay, by tomorrow. So if you want me, you can use the link and open a brokerage account and start trading again. I'm available. You can, we can stay in touch and I can teach you a lot about stock trading. And if you want to invest in the stock market, it is simple. Investment is not that hard. Okay, okay, depending on some analysis, you can buy some stock. I like buying stock, okay, dividend stocks. If I want to invest in stocks, I want to buy dividend stocks and I want to hold on to them because I will keep getting the dividend, you know. So I do that a lot of time. Now, if you want to invest in the stock market, you can start small. It means that you can start putting 50 bucks on the side every week. Okay, you put it in your trading account, you buy one, two stocks, and you hold on to them. But once you start doing that, um, you will see the difference because there's something that we call the compound effect. Okay, it means that you buy a stock, the stock pays you dividend, you reinvest that dividend, and the dividend keep making money for you. Now, I okay, I usually tell this to the young generation. Okay, I'm still young though. I'm still young, but I advise young, those 18, 20 year old to start investing. The reason is time and consistency, right? Will work for you. You start putting 50 bucks in the stock market when you are 18 years old or 20 years old. You start putting 50 bucks every week. You open account, you start doing that by, okay, in 30 years, you might be a rich man. It means that you will have your money working for you. And I don't know how many times I'm going to say you have to invest in the stock market. And we don't know about that. But I'm trying to explain it to many people, and I know that people are fearful. A lot of people, they always say, "Oh, I'm gonna lose my money. I'm gonna lose my money." Yeah, but what if you don't risk your money? How are you gonna make money? So you have to risk your money in order to make money. But the stock market has proven that the stock market has always gone up. It will okay, it might go down if there's a crash, but it always bounce back. Okay, that's how the stock market is. And when the market crashes, that's the best time to buy. That's the best time. And unfortunately, that's the time that people don't want to buy. That's the time that people don't want to buy because they are fearful. The market is going down. Everything is collapsing. I don't want to buy. I'm not telling you to buy a falling knife. I'm not telling you to catch a falling knife. What I'm saying, when the market drops, that's when you want to buy. Let me show you the S&P 500. Okay, Spider. Okay, I'm gonna show you the ETF on the. I I mean I showed that like few minutes ago, a few hours ago to the family. Um, when you look at this chart in 2007, okay, 2007, 2008, then the market crash. We have the huge crash, almost 50% of the stock in the S&P 500 in the stock market crash. Okay, crash. If you did have your money in, see how the market crashed. Almost 50%. Yeah, 50 to 40% drop. That was huge. Then look at how the market rallied till now. Till now, I'm going to show you the chart. Look at how the market rallied. Look at where we are right now. Since this drop, we broke above this drop and look at where we are. You put your money in around this crash. Let's say you get in this at this level. Look at how the market went back up. That's the reason why investing in the stock market is one of the best way to become rich, okay? Because you want to catch the bottom. Sometimes it's difficult to catch the bottom and you will I mean you have difficulty catching the bottom because you don't know if it's the bottom and no one knows. But when the market crashes, when there's blood on the street, that's when you want to buy. And in I haven't done this okay review like few weeks ago, but I'm gonna show you a review that I usually do on the S&P 500. Okay, in October 2018, just recently, right? The stock market it tumbles a little bit, then we have this huge drop. Hold on, let me show you. October, then we drop. We have this huge drop. The market crash. It was a small crash. It wasn't that big. Then look at where the market is right now. We are all-time high again. All-time high. The market is high again. You see, so you want to catch those opportunity in the market. That's how you become profitable. Okay. If anyone has a question, I can answer those questions. But if not, I think I'm gonna end the stream now. It's almost 2:30, 2:28, and I gotta wake up tomorrow morning. I gotta trade some stock too. So I'm not I'm usually trading stock from 9 o'clock till 11:30. I'll be on my screen trading stocks. And thank you for watching. And have a beautiful night. And if you have any question, feel free to leave me a comment. Okay. Thank you very much, and have a beautiful one. Bye bye.